Good afternoon, ladies and gentlemen. Welcome back to this weekly market review. I have my usual co-host with me today, Mr. Gerald Wong. How are you, Gerald? Do you have a good rest over the long weekend?
Well, I see that a lot of my friends had quite a lot of interesting activities over the long weekend. But for myself, I had to stay home and was reading up on some circular around a recent transaction in the Singapore market. Hopefully, I would be able to share more about the transaction during today's session.
Yeah, man, that's the problem with a finance professional, I believe. I think I suffered the same fate as you over our career. I think it's like over the weekend, we are always catching up what is the latest happening in the market, what is developing, trying to take the first step and be the first one to enter of any opportunities that arise when the week reopen on a Monday, or in our case here, the long weekend, today is the Tuesday. So I see that you have prepared the slides today with the title VTAC and 17 Live de-SPAC Overview. So yes, we have been receiving news that this will be the first de-SPAC that will happen in Singapore. And do you have more of this detail that you will share with us later?
Yeah, so I will spend quite a bit of today's session going through this VTAC and 17 Live de-SPAC. But before that, I'll just do a quick recap of the market, given that we also saw quite a number of different developments across the US and Singapore market. Okay, as usual, today's session is for information purposes only. So while we are going to be talking about particular stocks, it should not be taken to be financial advice. If you find the session helpful, do leave us a review on Google, either by scanning this code or going to the website. Okay, and if you want to be asking us follow-up questions, do join SIAS as a member, because one of the benefits is that there's this monthly SIAS session. In fact, there's one session that will be happening this week, and the membership costs only $12 per year, which works out to $1 per month. Okay, you can go to this website, sias.org.sg/membership to find out more. Okay, so first we start with a recap about the market, just in case you have lost touch a bit because you were busy over the long weekend, and whatever happened in the past week seems actually very far away. Effectively, what we saw in the US market is a continued rebound, given that we have seen that the US bond market has remained relatively calm, and the bond yields have not actually gone back up to where it was at the peak a few weeks ago. Okay, so that continues over the past week. But for the STI, we saw a bit of a moderation after the bounce in the previous week, with the STI down by 1.2%. Okay, so in terms of the top performers of the week, we saw Sembcorp Industries up by 4.3%, Venture up by 3%, SGX up by 1.9%, SETS 1.2%, and Imperador up by 1%. Okay, of these names, we saw actually corporate developments by Sembcorp Industries and Venture. And of note, Sembcorp Industries actually had their Investor Day actually held, where they gave an update around what they want to achieve over the next 5 years. Okay, in terms of the worst performers, we saw Singtel down by 3.7%, ST Engineering 3.8%, CapitaLand Invest down 4.2%, Frasers Logistics and Commercial Trust down by 5.4%, and City Developments down by 6%. Okay, so amongst these names, once again, we saw quite a number of news flow around Singtel, given that it provided its latest results, and its subsidiary in Australia, Optus, also faced a major outage. Okay, so these are really some of the key corporate news. Sembcorp Industries, they announced a target to be able to grow its gross installed renewable capacity to 25 gigawatts by 2028. So this is part of a strategic plan over the next 5 years. Singtel operating revenue for the 6 months ended 30th September, declining due to the strength of the Singapore dollar. At the same time, like I shared earlier, the Australian subsidiary Optus actually faced a major outage, which impacted millions of customers. Last but not least, we also saw VTAC SPAC issuing a circular where it notified shareholders of a extraordinary general meeting, which will be held to actually vote on the proposed business combination with 17Live. Okay, so what we'll spend a bit of time today on is around this news on VTAC SPAC. And for those of you who are not familiar with what SPACs are, I will do a quick recap. So effectively, a SPAC is a blank check company where effectively you've got a group of financial managers who come together, raising money through this IPO. And with the proceeds of the IPO, which are deposited into a third-party account, they are really looking for a company to acquire. Okay, so this is effectively what a SPAC typically does. If the acquisition is voted to be approved by the shareholders, the combination is made, and the SPAC and the target company will then combine to form a new publicly traded company. If the acquisition is not made, the SPAC is dissolved and investors get their money back. Okay, so really a SPAC has the objective of finding a target to be able to acquire. And this is what the shareholders of the SPAC will then vote on as to whether they allow the business combination to be completed. So this is the typical life cycle of a SPAC. Initially, we have the IPO, which involved the SPAC unit. We have the detachment of the SPAC unit into shares and warrants. And thereafter, the SPAC sponsor will go about looking for a company to acquire. Once a target is identified, then the process around the EGM vote on the business combination takes place. If the vote is in favor, the new entity starts trading after the combination is completed. If the vote is not in favor, then the SPAC sponsor has to go back to continue search for a new target. Okay, so effectively they need to do this within a 24-month time frame. And if they are not able to do so, they can ask for an extension with the SGX for another 12 months, which brings it up to a 36 months time frame for the entire process to take place. Okay, so what happens at the SPAC? Effectively, you have got this listed SPAC where the current shareholders would be the SPAC sponsors as well as the public investors. Once the target company is identified, recall that the target company would have its own set of shareholders as well. And then you have this new group of investors that can potentially come in, and they are called the private placement investors or PIPE. Okay, so what these PIPE investors do is that they provide the additional equity for the SPAC to be able to complete the business combination. What this means is that by the time the combination has taken place, you have got potentially 4 groups of investors, which would include the SPAC sponsor, you've got the public investors, you've got the target company shareholders, and last but not least, the PIPE investors. Okay, so in a nutshell, this is really what a SPAC transaction really involves in terms of the timeline and the different set of shareholders that can potentially come in. Okay, so next we are going to look specifically at VTAC SPAC. This was a SPAC that was actually listed early last year. And then what we saw is that in October, they announced the proposed business combination with 17Live, of which we received the circular informing shareholders of the EGM last week. Okay, so you see the share price actually coming down all the way through 2022 and having a bit of a bounce in 2023. Okay, so what is this transaction about? Effectively, you have the SPAC sponsor, VTAC, wanting to form a business combination with this company called 17Live. And 17Live, what is this company? I'll just go through briefly. It is a leading live streaming platform in Japan and Taiwan. This is based on the company's disclosure. And its key business is really around live streaming, where you have got real-time user-generated videos to be able to engage with the users. Okay, so this is really the core of its business model. And in terms of some of the key statistics, it has got 87,000 contracted streamers globally. It has got users who on average have a daily view duration of 93 minutes. And effectively how it monetizes will be through being able to provide some of this monetization that will involve gifting this different gifts to the live streamer, being able to provide some additional games on the platform where it's able to monetize and get a revenue share from these services that are provided to the streamers as well. Okay, so these are the current 3 key areas of monetization that comes through from the platform that 17Live provides. Okay, in terms of the growth drivers of 17Live, currently, like I shared, the key business involves live streaming. And based on industry data, that is expected to grow by about 20% CAGR between 2022 and 2027. What it potentially could also grow into would be VLiver. So these are effectively virtual streamers, and this has a market size that can potentially grow by 40% over the next 5 years. Last but not least, another potential area of growth is live commerce, where effectively the streamers will be able to sell goods and services through the live stream. And this is a market that is, again, expected to grow by about 25% between 2022 and 2027. Okay, so in terms of the key statistics around the transaction, the purchase consideration is up to 925 million Singapore dollars, which includes consideration shares of 803 million and earnout shares of up to 122 million Singapore dollars. Okay, I shared earlier the different groups of shareholders that can potentially come in, and this can make the total equity value of the enlarged group post the completion to be between 999 million Sing dollars to 1161.9 million Singapore dollars. Okay, so this will include the purchase consideration of up to 925 million. There is the escrow amount, which is the amount that has already been raised through the initial IPO of the SPAC. And depending on how much will be redeemed out of this amount that is in the escrow account, it could end up in the range of between 60 million Sing dollars to 208 million Singapore dollars. And you've got the PIPE financing. I shared earlier, these are additional shareholders that can potentially come in to provide the financing. And then you have got the special bonus scheme. And with this, the total equity value of the enlarged group post the completion could be in the range of up to 99 million Sing dollars to 1162 million Singapore dollars. Okay, so in terms of the key timeline of the transaction, for those who are shareholders of VTAC SPAC, the circular has been announced. And with that, shareholders would have the ability to attend the EGM that will be held on the 1st of December. Okay, you can choose to attend the EGM in person, or you can appoint a proxy to vote at the EGM by submitting the proxy form by 29th of November 2023. Okay, so effectively that is the key date to be looking out for. And in terms of what happens after the EGM, you have the resumption of trading of VTAC SPAC on the SGX after lifting of the trading suspension on 4th of December. If the vote is in favor, the expected completion date will be on the 8th of December, and the expected trading date under the new name 17Live Group Limited. Okay, so these are the key dates to be looking out for, and for additional details, they will be in the circular that has been distributed. Okay, so that is really the key highlights of VTAC SPAC and the transaction. In terms of what else is happening in the market this week, we'll be looking out very closely for the US Consumer Price Index data. This will give us an indication of the inflation trends in the US. and whether the Fed will continue to raise interest rates as a result. Okay. Apart from that, we also have the SIAS Corporate Connect with Netlink Trust happening this evening. And then we have the SIAS that will be happening tomorrow on the 15th of November. So continues to be a week that is filled with a number of different events. And with that, I'll pass over to Sunny, who will share with us some of the technical analysis around the market. Over to you, Sunny.
Okay, thanks, Gerald. Exciting developments in the Singapore market coming to the end of the year as well as the beginning of next year with the first de-SPAC that will happen in Singapore. So if you are a shareholder or if you want to participate in this new up and coming company, 17 Life, do look out for the circular information and do seek a professional financial advisor advice before, as usual, before participating or taking any capital markets action. Okay, so let me do a roundup of what happened on the STI market. So this week is a short trading week. We have a holiday on Monday. So previously we talked about the support zone of the STI level around this orange zone level. So we have broken even the year-to-date low of this year. So I was saying that support level is around here, this orange zone, and actually I have entered into a long position somewhere around this orange zone. For the first one was during the double support that you see over here between July and August, as well as the year-to-date low. So average my position is around here. So now I'm at the money or slightly in the money. We saw a rebound after creating a new year-to-date low on 30th of October. We reached a high over here at around the 3,170 points level on 6th of November, which is last week. And then I focus on this downward trend line that you see over here, which is the high in July this year. Also the matching somewhere very close to the year-to-date high in January. So this downtrend line will be the resistance that a lot of traders will be looking at. And looking at the price movement recently, it seems that this downtrend line, which was formed on the high of August as well as September, retested in October, is still a formidable or is still a very strong resistance level that we are working against. So that's why you see on the 6th or 7th of November over here, we see a pullback on the STI index after we saw the explosive rebound last week, which is about 2.67%. So this week we are down 1.2%. So that's a bit of retracement over here because we are testing this resistance over here. So you might be asking me, where are we going next? So where are we going next? We are now holding on to the 20 days moving average, which is the Bollinger Band basis over here. I am projecting probably we will need to retest the year-to-date low again, which is the 22nd March low. So we are about 10 points away, I would say. Now the STI index moving on this Tuesday morning is around 3,100. We are 10 points away from the previous year-to-date low that we see in March. So probably during this area over here, I will just highlight them in orange again. I will be thinking of accumulating on the STI index again. So between this zone of around this level, okay, to this level, this is where I would say that it will likely be the accumulation zone, and I will go in to be adding on to my position. Okay, this line between this line, which is the year-to-date low in March this year, as well as the June low last year. Okay, so if the index come back down to this level, I will accumulate again. Why I am saying that is because if we see that this downtrend line and the support that we see over here, we are going into a descending triangle, and there will come a point in time where we reach somewhere around this level, and then we will say whether is the STI going for a breakout or is it going to be continued to be suppressed by this downtrend line. Okay, so during that period, we will relook at the indicators much more closer. If you look at the indicators right now, the MACD definitely is showing signs that the uptrend we saw last week or the 2 weeks before is definitely subsiding for the last 5 trading sessions, which is last week. And the MACD line is sort of converging towards the signal line, meaning that the uptrend that we saw previously has sort of lost quite a bit of momentum. However, the MACD line has not crossed below the signal line yet, so we have not go into a bearish momentum kind of situation. We may go into a consolidation around this period, okay, as long as the MACD line stay above the signal line. So that is my basis of why I'm also going to be doing some accumulation over here on the STI index. Next, let's look at the RSI. RSI has dropped below the 50-point neutral mark. That means that momentum, the uptrend momentum that we saw earlier, is very weak right now. It's below the 50-point neutral mark. However, the RSI also did not go into the, or not even close to the 30-point oversold mark yet. So it's just telling us, the RSI is just telling us that the current momentum now is very weak, and so far we do not foresee any rebound that's going to come back in very soon. So that's why I said this is the support level that I'm looking at. I'm looking to accumulate. So why am I accumulating over here? Let's do a little bit of a year-end recap, I would say. Although we are still quite far away from the year-end, quite far away from December, I just want to remind everyone, remember last year when we saw the October low of last year? And then after the narration then in the market, or what a lot of economists or analysts expected, was this year, somewhere in the middle of this year, we will be expecting the rates to come down, or rate cuts to happen. That's why with that expectation, the last year, October towards November, you see a very big jump. So this year, fast forward, we look at so far the FOMC meeting announcement, the narration that is being put out by US Fed Chair. We are projecting that next year, June, we will see the next rate cut. So to me, it's a bit of a deja vu. It seems like what happened last year is also happening this year. So last year was a pretty straightforward kind of a situation. We know that throughout the year, we are expecting the rates to go up all the way until later part of the year, where we start to project the rates will come down in this year. So that's why it's a very straightforward. Last year, I was looking at the resistance level and playing the short. And then after, on the support side, I'm accumulating. So if I'm accumulating over here on the STI index, you may be asking, is this a short-term trade? Is this an investment kind of a objective? So my thesis here is, we have seen this scenario play out where we project 6 months ahead. Okay, although the Fed funds pricing has pushed back the rate cuts that were initially expected to happen in May. Now we are going to expect it in June. So the same scenario seems like it's playing out last quarter of last year, and now we are going to last quarter of this year. The same scenario is playing out. So the 2.67% we saw 2 weeks ago, is it the beginning of this rally that we saw last year? It seems to me that this is a similar kind of pattern that is developing. So this further enhanced my thesis that yes, this is the support level that I'm going in. I will be taking long positions over here around this level on the SCI index range. And then this can be a breakout if we have the inflation data tonight points to something that inflation is coming down really fast, or the Fed might be giving further signals that the rate cuts might be happening in the middle of next June, and they are ready, and they may be pausing the rate, or this might be the end of the rate hiking cycle going to a long pause. So the accumulation here, I foresee there's two scenarios that can be playing out. One is the fight to bring inflation down can drag on for years. So even with the Fed fund pricing that the middle of next year, we should be expecting rate cuts to happen, it may drag for another year or another 2 years. But definitely these are the support levels that is a very good position to get in. I would say it's a safe level to get in. Whether it drags on for 1 or 2 years, sometimes investing is a waiting game. You need to have a lot of patience. So definitely I'm accumulating over here. So for this year, I would say you can see that market on the STI index at least is like not moving anywhere. We are below where we started at the beginning of the year, and going to end of the year, we may be also close to this level. So it's a kind of a range bound kind of a trading or direction on the STI index this year, which is in line with the Goldilocks scenario now in US. So accumulation over here, I felt is a good support level to go into. When will we reach the year-to-date high again? That one I would need further indication. But I think even if we get into this support level over here, and then if we get some kind of a breakout for this year until end of December, right? Probably the target that I'm looking at will be the red color line that you see here, which is the 200 days exponential moving average, or if you are using the simple MA, then it's the 200 days moving average. This level here, 200 days moving average in red is 3,200. So that is where the target that I will be looking at for this year, okay, going to December. So this might be the final or the last trade that I'll be taking this year. So if it hits into this level, I would take a long position, and then of course targeting the 200 days moving average at the max. If we hit that level, I might take some profit off the table. Okay, so if this is also a precautionary measure, because if you look at the margin now between where we have 3,100 today to the 3,200 target of the 200 days moving average, this is only a 100 points kind of a range to play with. So we wait for a bit of a pullback to this support level before thinking of going long again, thereby giving us a bigger buffer and bigger margin to play with to target the 200 days moving average at 3,200. So that is my take on the STI index development so far. Let's look at the Dow Jones index. Okay, so for the American index, okay, or the US index, I would say, you might be seeing or reading a lot of the analyst report recently saying, hey, we got a golden cross happening. What is a golden cross? A golden cross, typically for technical traders, we look at the 50 days moving average and the 200 days moving average. When the shorter term moving average cross above the longer term moving average, which is what you see here, if I'm going to zoom in, okay, if this is the blue color line, okay, over here I have the EMA, exponential moving average. So the blue color one is the 50 days and the red color one is the 200 days. So we have a crossover happening somewhere last Thursday or Friday. Okay, I think it's a Friday because yesterday we have a US trading. So yesterday, this is the 13th of November, Monday trading. Okay, so the Dow Jones index has actually broken above the previous high in October that we see over here. So what does this mean? When we analyze charts, right, if the candlesticks continue to form a series of lower highs and lower lows, we are saying that the index is in a downtrend. However, once if we have a new high achieved than the previous high, that means that the downtrend observation that we observed previously with the series of higher high and lower lows is negated. That means we may have broken that trend of a downtrend, and now we have a higher high developing, a high that is higher than the previous high. So that's why I'm saying probably going to the end of the market, we are probably going to see a similar pattern kind of happening, what happened in last October, where you see a very big run up. Although this year, I think the magnitude will not be that big. I cannot say for sure right now, but definitely if we hit support level, if we hit pullback levels again, definitely that would be a safe level to get into to play on the longer term, whether it's a trading position or an investment position. Going into next year, we are still projecting the rate cut, and then whenever a pullback happens, it's a good time to get in. So the Dow Jones index now at this level of 34,337 points, what should we do right now? I think even if we are on the same narration or the same thesis that this year-end rally that we saw last year is going to happen, I think the more conservative projection would be we need to wait for a bit of pullback on the Dow Jones index, at least to hit the red color line as usual, the 200 days moving average, okay? Use it as a support to get back into the Dow Jones index. So we don't usually chase the market, we wait for the market to come to us. And if we touch the 200 days moving average, the red line that you see here, then that will be a long-term support that you are going to get into, which should be a safer level, which will give you a buffer, a margin of safety to get back into the index to play the longer-term trend or even the short-term trading upward. So where is the target that we are looking at? If we are going into the year-end December rally, definitely the previous resistance we observe will be somewhere around here, the high of September. So this area around here, I put this line over here, I will just enlarge it for now, okay? So this line over here, as you can see previously in August and September, you more or less see a double top formation forming right here. So if we are going to play the Dow Jones index from 34,300 to this level here of 37,800 or 34,800 or 900, this would give us about a 500 points or 600 points upside. But you can see the movement can be very big. That's why, hence, if you look at the level right now, I would prefer to get in on a level at a safer level, which is around the 200 days moving average, which historically has proven to be a very strong support for the Dow Jones index. Just like what happened over here in May, when it crossed below the 200 days moving average, it starts to go up, it starts to rebound or bounce back up very strongly. So this is the entry level that I'm looking at. The first one is the 200 days moving average. Following that, you also have the green and the black line, which are the 20 days EMA and the 20-day SMA, okay? So this is the area, this is the zone. I will highlight that, try to highlight that in orange for you. Okay. Okay. So this is the area that I'm looking at to get back into the Dow Jones index. However, this may not be a short-term trade. It's more of a longer move. It's more of an accumulation move, playing on the macro thesis that next year we are going to see a rate cut. And it's the same scenario of what happened last year. The narration that was we are talking about last year is it may likely play out again this year. Okay. So looking at the indicators, we still see very strong MACD indicator showing very strong momentum in the Dow Jones index. So I will not be surprised if from here we straight away push towards the high of 34,900. But then as a precaution, I'm just going to say that my thesis or I will just put a limit order and my position will be somewhere around here. Okay, so we also have the previous low that we hit. That means we had previously talked about this May low. So investors who got in at this support level previously at the low of May this year would probably have targeted the high that you see on 17th October and took some profit off the table. So that's why you see a bit of a pullback over here. So there's no rush to get back in right now. Tonight is the inflation data, which can swing the market. But let's say if the markets become volatile and it has a pullback towards this level, that would be a sweet spot, which I think I'm going to consider getting back into the Dow Jones Index. So the RSI is still at a very strong and healthy level. The reading of RSI 60 is an almost perfect reading for a healthy, strong, and we are looking at continuous upside on the Dow Jones Index. So we have not hit the overbought level, which is 70. We are 10 points away from the neutral mark. So this is a healthy momentum being recorded on the RSI indicator, and Dow Jones Index could possibly have a high chance of retouching the 34,900 points level, which is the double top formation that we see on the September period, during the first 2 weeks of September. Okay, I'll just put the double arrow there as an indicator to you that this is a double top formation that I'm seeing on the Dow Jones Index. Next, let's move to the S&P 500. So the S&P 500 doesn't really have the golden cross signal that we are talking about on the S&P 500 doesn't have the golden cross signal that we see on the Dow Jones Index. We can see that the blue line over here is still have some gap above the 200 days moving average. Okay, so where the S&P 500 might be heading at this point level, of course, we have also broken the high that we saw in October this year. Okay, and now we have a new high. That means I will just reiterate the downtrend that we observed since the high in July towards the low in October. This downtrend may be negated or may have been broken, and now we have a higher high forming. Thereby, we are out of the downtrend right now. We may go into an uptrend, we may go into a consolidation. So these are the two projections that we are having. And if we may be going into an uptrend or a consolidation, sideways, range-bound kind of trading, then it will be conservative, the same thing, to get back in on the 200 days moving average, which is the red line you see here, somewhere around the 4,270 points level. And the same thing on the S&P 500, which I observed with the STI index, we have a downtrend resistance line connecting the high in July as well as September this year. And yesterday we hit that line, and then we saw the red candle or the doji candlestick pattern happening. That means that the uptrend now is neutralized already. So what should investors do, or what should traders do, or what are traders thinking right now? Probably they may have played the support level around here, which is the low somewhere we see in May this year as well on the S&P 500. We took a long position, hit this mini resistance level over here. I'll just put in the arrow. So some kind of you can see during this period, a lot of sellers start to come in and sell down. So same thing over here, where we got in here, which is the May low, we use that as a reference, and we take a long position. It hits this double top formation. Traders start to take profit off the table. As you can see, short-term traders sell out their positions because this is the resistance level they are looking at. So we got a red candle. After that, we have on Friday, we have the big green candle again, buyers getting back in again to push the market higher. And we touch this downtrend resistance line, thereby we have a red candle over here. So if you connect this downtrend line, right, with some horizontal line, okay, for example, here, the 21st August low, the index S&P 500 may be going into a consolidation pattern here, and it is a formation. I would say it may be a descending triangle. So if we go into a triangle formation, we are looking for a breakup or a breakdown. Okay, looking at the indicators, MACD line gap with the signal line is still pretty big. Momentum is still strong. RSI above 50, below 70 at a reading of 60, also very strong. We may likely retest the high that we see in September. Let me put the line over here to get the reading, okay, which is around the 4,540 points level. So with the level that we are seeing right now, 4,400 to hit that 4,500 level, that is 100 points kind of a range that we're looking at. So if you compare taking a long position now, the risk and the reward ratio is actually not in your favor. So I would prefer it to go to the 200 days moving average. Then you have a bigger gap between your entry and your target, and the smaller gap between the previous low that we see, the recent low that we see in October. Thereby, your margin of safety is over there. Okay. So same thing, S&P 500, 200 days moving average is the gauge that you are looking at. Next, let's move to the most volatile and the best performing in US index last week, which is the NASDAQ Composite Index. So we see that we have also broken above the previous October high, thereby downtrend is negated. We may be starting a new trend or the continuation of the longer term uptrend that we have seen in the US indices since the low of October last year. Okay, so if the same thesis apply, the rebound that we saw last year is going to play out again this year because the narration from the Fed and the environment seems to be the same. We are still forecasting a rate cut at the second half of next year, in the middle of next year. So this when will be a good time to get in on the NASDAQ Composite Index. Same thing, go back down to the 200 days moving average. But because you can see that NASDAQ Composite Index has been a big winner this year, you may not even hit the 200 days moving average before it bounced. So we can actually look at the 20 days moving average, which is the Bollinger Band basis. Anything below the lower bound of inside the lower bound of the Bollinger Band basis, you can start to take note and you may gauge the situation from there, whether you want to get in or not. So rule of thumb will be look at the 200 days moving average, which is the long-term support at 13,016 points or the 13,000 handle. That will be a good time to get back in to ride the NASDAQ Composite Index again. So MACD indicator, as usual, very strong. The gap between the MACD line and the signal line is pretty significant. Thereby, the uptrend momentum is still have a very strong presence in the index right now. And if the signal line of the MACD index cross above the zero baseline as well, then probably we will have a very big jump in the momentum level of the NASDAQ Composite Index, thereby pushing the NASDAQ Composite Index higher. So next resistance level we are looking over here, which is the 1st of September high. Okay, and this level is around the 14,149 points level. So between now and that, it's only a 200, 300 points kind of a range. And if it goes back down to 200 days moving average, you can see that the risk and reward is not really in your favor right now. So I prefer to get in on a 200 days moving average, then I have a bigger gap up towards my target, which is the 1st September high. And my risk will be below the 200 days moving average to the previous low that you see on the low of 26 October. So I think the indicators I have already iterated, it has been the same kind of a behavior for the other two major US indices as well. So do keep a lookout on a pullback and get back in on a safer entry level and target the previous high that we see in recent months at for the NASDAQ Composite Index is the 1st September high at 14,149 points. So this is my analysis of the major US indices and the Singapore market. Any final words and reminders for our viewers, Gerald?
Yeah, so I think we'll be looking out very closely for the inflation number that will be out later this week. At the same time, we have got quite a number of different events that are coming up. We've got the SIAS webinar that's happening tomorrow as well. So if you've got any questions and are a SIAS member, do join us for the session and we can have a further discussion around what is happening in the markets.
Yes, okay. So thanks for the reminder. Yes, tomorrow is our SIAS. I was still thinking that today is a Monday. I still have one more day to rest before we start the SIAS. But no, tomorrow, Wednesday, 15th of November, is our monthly SIAS, which is for our members only, where you can ask me and Gerald any questions on capital markets, on the stock market. And if you have any questions on the SPACs, do feel free to sign up as a member and join us, and then we can grill Gerald together on what is the technical or the technicalities of these SPACs, the de-SPAC that's going to happen. So this will add more vibrancy to the Singapore market. I think next year will be an even more positive year. Saying this, it's like we have come to the end of the year already, but I think we are still quite far away, so near yet so far Christmas. So I think that's all the time that we have for this week. So as usual, his name is Mr. Gerald Wong and my name is Sunny. We will see you again next Monday, same time, same place. And for members, we'll see you again tomorrow on the SIAS session. That's all we have for today. And this is Sunny signing off.